Have you noticed your banking app has gotten, well, a lot smarter lately? That's because AI, especially stuff like ChatGPT, is moving into our financial lives at like lightning speed. And that is raising a huge question. No, really, think about it for a second. Would you actually take advice on a loan or tips on where to invest your money from a chatbot? That's the exact question we're going to dig into today. So here's our game plan. We'll start with how AI is popping up in our banks. Then we'll dive headfirst into a really fascinating real-world study from Jordan. From there, we'll uncover the 6 key ingredients that build trust, see what the data actually says, and finally, wrap up with what all of this means for you and your wallet. Right, so what does this new AI in your bank actually do? I can tell you we're moving way beyond just asking for a branch's opening hours. You should think of them more like these new financial assistants that can handle some pretty complex stuff. Okay, let's get into this. We're talking about AI that can explain tricky things like credit scores or compare different mortgage options for you right there on the spot. It can even speed up the whole loan approval process like you wouldn't believe. It's a massive shift in how we handle our money. But how do people feel about all this technology? To figure that out, we're going to open up our case file for this explainer, a super detailed study that looked at this exact question in Amman, Jordan, where a bunch of big banks have already started using these AI services. And this is what makes this so interesting. This isn't just a bunch of theories. Researchers actually went out and surveyed 419 real bank customers. They got hard data on what makes people either trust or, completely distrust these new AI tools. Now check this out, because this is really fascinating. Look at the experience level of the people they talked to. Over 80% of them had been using ChatGPT for more than a year. So these aren't newbies. They're already familiar with the tech, which makes their opinions on using it for something as serious as banking really, really valuable. So the researchers got really specific. They didn't just ask a simple, hey, do you trust it? No. They zeroed in on 6 key ingredients. Let's call them the 6 pillars that have to be there for us to feel confident. Let's break down exactly what they are. So, as you can see, they put these 6 factors to the test. It all starts with the basics, like, is it credible? Is it informative? But it also goes deeper into the whole experience, the interaction, the personalization, and finally, is the advice actually suitable? And, this is the big one, what's our gut feeling, our perceived trustworthiness? Let's take a closer look at what each of these really means. First up is credibility. And this is like the absolute foundation. I mean, think about it. If you ask an AI about interest rates and you have even a tiny suspicion the answer is wrong or outdated, well, nothing else really matters, does it? It's that core belief. Can I actually rely on what this thing is telling me? Okay, next we have informativeness. See, an answer can be technically correct, but is it actually helpful? This is all about getting high-quality, relevant information that gets to the heart of your question, not just some generic reply that sends you running in circles. Then you've got interaction. This is all about the experience of actually using the thing. Does the conversation just flow, or does it feel like you're fighting with a clunky, frustrating machine? A great interaction feels like a smooth, easy conversation, not like you're just typing commands into a lifeless box. Now, personalization is where things get really interesting. It's the huge difference between an AI giving you some generic advice you could find anywhere online and advice that takes into account your specific income, your savings goals, your spending habits. It's advice that feels like it was made just for you. And content suitability is absolutely crucial. The information has to be appropriate for a serious, high-stakes financial conversation. I mean, getting a stock tip from some random website is one thing, but getting that same advice from your official banking app, that carries a whole lot more weight. The content has to be suitable for that level of trust. And finally, all of this, it builds up to this one thing, perceived trustworthiness. This is the ultimate gut check. It's your willingness to stop just gathering information and to actually act on it. Are you willing to risk your own money based on what an algorithm suggests? That is the real test. So, the researchers had their 6 pillars. The next step was to put them to the test with all that data from those 419 bank customers. They wanted to see which of these factors actually made a difference in their financial decisions. Let's see what they found. So, for each of those 6 factors, the researchers made a simple prediction: that it would have a real, measurable impact on people's choices. On the next slide, we'll see the results. Anytime you see the word supported, it means the data prove them right. And the verdict is in, a clean sweep. Every single one of them was supported. And this brilliantly illustrates that building trust isn't about just one thing. It's a whole recipe. You need the right information, a smooth experience, and that overarching feeling of reliability. But one of these was way more important than all the others. So here's the crucial takeaway. While all 6 of those factors were important, that gut feeling, that perceived trustworthiness, it was the heavyweight champion. It had the single biggest impact on whether someone would actually follow the AI's financial advice. It mattered most. Okay, so that's the data from the Jordanian study. Pretty clear, right? But what does this mean for the future of banking for all of us, no matter where we live? Let's connect the dots. Here's the bottom line. For us to trust an AI with our money, it is just not enough for it to be smart. It has to feel safe, it has to feel credible, and it has to feel reliable. That gut feeling of trustworthiness, that's the most critical piece of the entire puzzle. Any bank that wants us to actually use their AI tools, they need to focus on building all 6 of these pillars. Because what we're seeing in Jordan, that's just a preview of a massive shift that's coming to banking everywhere. And as the researchers themselves put it, this isn't some small tweak. AI is fundamentally reshaping our entire relationship with companies and really with our own decision-making process, especially when it comes to something as important as our finances. And that leaves us with one last big thought to chew on. As these systems get smarter and more integrated into every corner of our lives, this question of trust, it's only going to get bigger. It's not just about banks anymore. It's about everything. So how are we going to learn to decide what and who to trust with our most important choices?